Hola, ¿qué paso? How's everybody doing? This is Hala Pablo. And I want to talk a little bit about Litecoin right now. I want to skip all the fluff and get right into it, like I like to do. So I was talking to somebody today in my Discord trading group, and he had a question about order blocks and bull traps and things of that nature. And I started explaining about liquidity voids and things like that. And I was like, you know what? I have a chart recently that played out really good. And I think that encapsulates all of those things that I would try to convey to him about liquidity voids and using them in conjunction with Fibonacci ratio. So I went ahead and got the chart off of TradingView. This is a chart that I uploaded, and you see it's for Litecoin. And I uploaded it back on the 27th of November. Today is the 5th of December, so it's been about a week or so. And it's played out pretty much to a T. I have on here a Wyckoff schematic, as you can see. Here, of course, is the markup. And then it reaches the buying climax here, and that's where supply comes in. Obviously, those who don't know about Wyckoff, go ahead and read up on it. But anyway, it retraces back and it stops at the automatic rally, comes back up and forms a secondary test, and that establishes the trading range. And so I drew out this trading range on here. Again, this is a chart that I uploaded to TradingView, to my TradingView account, and this is as far as it had gotten. And I went ahead and I gave it a short, which is a bearish bias. And with the understanding that at some point, it's going to retrace. It's going to retrace and down into this Fibonacci area. These are the Fibonacci retracement areas here that I've numbered. And I only do 3 Fibonacci numbers. I do the 1.272 ratio, and I do the 1.618 percentage in the retracements, and I do the same thing for the extensions as well. I think in crypto, there are others, but just to keep it easy, it's, the best way to do anything is to just make it simple, keep it easy, and then just refine those principles that you've established. And so I find that the 1.272, and the 1.618 are ideal for crypto, and of course the golden ratio being the 1.618. So anyway, I did it. I calculated it off the swing high and swing low that we had so far, off the buying climax, and some Wyckofians would label this a spring event or a shakeout area. I just see it more as like a sign of weakness, because I feel like it could go lower and then it can go back up, retest say the 1 Fibonacci retracement, and come back up to trading range midpoint, which is TRM. So that's this yellow dotted line. It's TRM, trading range midpoint, or the 0.5 Fibonacci. And so what gave me the distributional bias, remember this is a distribution range, distribution meaning dump or sell-off, that this is basically a top here, it's not going to reaccumulate, was the supply in the vertical bar volumes, the supply, in particular, the supply on the pullbacks. I'm always looking for supply dominance on pullbacks if I have a distributional bias. And sure enough, I saw supply predominance here on this area where the price action hit trading range support. We got a big supply volume bar spiked up. And then here as well, into these shakeouts, we had growing supply as well, where basically the supply bars predominate the demand before it and the demand after it. So they just kind of stick up and they dominate that this block. And these are, what are these, 1 hour candlesticks? So that's for that 1 hour period. We have total domination, and the 3 or 4 hours preceding and following, it also dominates. So that's how I determine, in a nutshell, volume predomination, either supply and demand. Then down here, we had this shakeout area, or this sign of weakness, SOW, I just labeled it. And then it came back up to trading range midpoint, and it wicked to trading range resistance. And in here, it was a failure to rally. We couldn't go past it. Demand couldn't penetrate it, and and rally past the barrier of the secondary test that had formed back a few days ago. So, and also if you look at these these demand spikes, they're not really they're not real impressive. They're not something that you would think, you know, I mean, the supply bars that preceded it were much stronger and much more numerous and much more prevalent, if you ask me, than these volume bars that you would see as the price action bumps off the trading range resistance. And if you think something's going to moon or pump, you really need to see more volume than this. So I labeled it FTR, failure to rally, and then it came back down under trading range midpoint, and it consolidated laterally for a bit, and then it tried again to hit the support line, or rather the trading range resistance, and instead we got a long wick, which is a rejection, a sign of rejection, and so I put a TRR off trading range resistance rejection shadows. So that shows that the bears are still in control here, and the bulls were basically put in their place. So, and then it came back down, and then it was hugging support, and that's where I concluded this chart. And then up here, I labeled this area here as a liquidity trap. It's basically if it does happen to pump, and it pumps up past trading range resistance, it's only going to go about as far into this area. And what it is, this entices the market makers are enticing basically the FOMO retail guys to go ahead and buy, thinking it's going to, like Bitcoin, or this is Litecoin. Litecoin's going to rally, and it's going to moon. So we see that that's what basically happened too. It went up, as you're going to see, but it stopped right at the liquidity trap with a sell-off commenced, but not before we had a pullback into the Fibonacci zone. So I'm going to play this to show you. Okay, so here it is. Now, these Fibonacci areas, remember we stopped here, it went right down, it touched the 1.272, almost to a T. You see that? Right here, it bounced off, it wicked the 1.272. And so this would be an ideal place to dollar cost average if you happen to be an investor in Litecoin, or you just wanted to trade this counter trend rally. This really, it's like a micro rally, I guess, in the counter trend. You could DCA at the 1.272 with your eye on if it rallies past it back up at this liquidity void here, this trap, this bull trap. So this would be the area that you would want to sell if you were to pick it up down here. But you would wait, of course, for it to retrace first into any of these Fibonacci areas before you consider a buy. And so had you done that, it would have worked out great. It would have came right back up. It would have, it would have done like a double touch and came back up. And again, you would have seen a wick at the trading range resistance. It would have played around a bit. Now remember, this is about a week worth of time. And here it bounced. You see, it went right through. We had a volume surge in demand. It came right up. And had you sold somewhere in here, I haven't done the calculation, but you would have made a nice little, a nice little profit there. You would have made some gains. So this is just one example, and you can see everything is on the money. Everything's on the money. It went right down to the 1.272, and it marked up all the way into the liquidity trap, where I marked here, right at the tippy top of it, and that's where it began to sell off. And this is where market makers began to dump their supply. And so we see it here. So anyway, I wanted to show you the efficacy or the potential power in using Fibonacci ratio with liquidity traps, which are really bear order blocks. Thing is, you have to have already did the VSA on the range, like we did back here with the volume, to determine the bias. And if we think that it's going to, obviously, if it's going to retrace, then we want to do and pre-designate the Fibonacci ratios accordingly and set that target zone. So if you're shorting, and you can even short like a bear trader or a bear investor can use these points to short, and a bull investor can use these points to DCA and take advantage of this momentum drive. So anyway, I hope I explained it pretty good to you. This is kind of just off the cuff sort of thing. I'm going to be doing some videos shortly on some rising wedges that that currently Bitcoin is in, and Ethereum. I may do Ethereum and Bitcoin at the same time, have like a split screen here for the sake of, simplicity and doing it, because that's what I'm all about, simplicity. Hey guys, if you like this video, if you like my style of teaching and technical analysis, I try to make it as easy as possible, but there's a lot of technical skill involved in this. I've been doing this since 2017, and well, this is a successful system for me, a very successful system, and I encourage anyone to check out my charts on TradingView. You'll see that well within the 80 to 85% win rate on these, and I'm not using cluttered up indicators and moving averages and Bollinger Bands and RSIs and MACDs and all that stuff. I'm not knocking anyone who does, but the banks don't use those. And I like to trade like the institutional guys, the money makers, the market makers, the composite operators, the hedge fund operator guys. Those are the guys that I mimic, and I try to find the forensic footprints through volume spread analysis of what those guys are doing, because they're the real predators. And if you're trading against them, then you're basically their prey. So it's a strong hands versus the weak hands, the predator versus the prey. You need to ask yourself, who am I? Am I going to swim with the sharks, or am I going to be food for the sharks? So we like to swim with the sharks, like pilot fish, alongside the sharks. And we need to eat what they eat, and we need to dump what they dump. So we do exactly what they do. We mirror them. We don't go against them. These guys who bought up here and held, they went against them, thinking that this was a pump. So maybe they didn't know about the Fibonacci. They didn't know about these the acquisitions down here with the supply absorptions. And so they became the casualty. They became an attrition of this dangerous game. So anyway, my charts will teach you how to not get smashed in the markets of the crypto world. So anyway, go ahead and subscribe, and I'll be sure to do more updates, and give me a shout out. And if you got a coin or something you'd like me to look at, go ahead, put it down in the comments, and if I get around to it, I'll do it. And I appreciate you guys. All right, guys, be safe, and I'll talk to you soon. Thanks for tuning in. Have a great day. Adios. Bye-bye.